Ooh. You got fucked on gold. They tore your asshole on gold. But I see where you went wrong. I'm looking at the chart right now. It's that it's the supply zone. Did you pull fibs? I've been not pulling fibs and I fucking get into bad trades. But then after I pull fibs, I'm like, wow. I could have avoided that trade.
All right, what's good? So, sorry, I had to get that set up on YouTube. Yeah, so basically this morning, well, last night, I took a trade on gold and slept through it, kind of just consolidated, and then ended up coming out and taking me out. And I wanted to play the New York Liquid, but it gave that signal. But now that I see, watching the 1 hour instead of the 4 hour, there was a clean POI that it hadn't tapped into. So overall bias at the beginning was bearish. We had this liquidity raid right here, and then I waited for price to push into that zone and then get swept. So way that I usually use like these buy to sell ranges is just use them as an area to like watch for what I'm looking for in other scenarios, but I can basically pair them together. So overall mistake was not waiting for this 1 hour order block. Streamlabs just gave me subscribed. But yeah, I appreciate it. I'm just subscribed. So I basically could have just waited for this POI. And I saw that after I had gotten stopped on the second one. I'm not going to chase it just because I have a rule. If I take 2 losses in a day, I don't continue to trade because then you just end up making up for your winning days with losing days. In this scenario, like I'm pretty confident it'll probably go down, but I'm still not gonna. You got to be disciplined to your trades, or you just end up like another one of those people who just sits there and continuously takes losses. But yeah, so overall bias really was just 15 minutes, the 15-minute rating liquidity into this 4 hour time frame. Right here, we rated liquidity once, pushed up again, and we got a displacement break. And on the second break is where I shorted originally last night. Not much movement through Tokyo or London. And then this morning, we started to come up and take that liquidity. So the reason I re-entered is because I looked at that as the most recent local buy side. And if we go to a 1 minute, got a shift in structure right there, but the context was off. So this is what I mean whenever I tell you guys, like, it's important to, you can get your patterns, but if it's not in the context that you need it to be in, patterns are less consistent or less likely to be successful. So in this example, you know, I was looking at the 4 hour, but I should have refined it down to a 1 hour just because it was a pretty big zone. And there was a fair value gap that matched up with that order. So simple mistake, but you know, it's important that you reflect off of them. You don't want to like, you know, go and be all sad about it and get stressed out. It's at the end of the day, it's not a big deal. You know, you take, because I risked a full normal risk on the first one, and the second one I just risked half of a risk. So basically, still in profits from just one trade with euro that I took the other day. We're getting missed on these. It looks like we might not be, but the other trade I took on euro from this zone. So, and it's important that I show you guys this because a lot of people just want to post, you know, wins only and super high R only, and then really behind the scenes, like a lot of those people are not, they're not really doing that all the time. It's going to be a lot of losses. So I am try to be transparent and show you guys that as much as possible, because I think it's like a toxic thing that a lot of Twitter traders, whatever you want to call us, influencers. I don't like that term because I try not to be that, but
hindsight warriors.
Yeah, exactly. Like it's just it's not like a healthy image to put out to traders, because the reason I do this stuff is to show you guys valuable content and show you guys what it actually means to trade. And that means taking losses, it means taking wins, it means not trading sometimes. And it's not as attractive as it may seem to a lot of people getting into trading. Like I have a lot of people that I know in real life that want to trade, and whenever they hear about trading and they hear about learning it, they see all of these Instagram traders flexing Ferraris, which I'm not saying you won't get that. You can get to that point, but they're not seeing what it took to get to that point a lot of the time. And they think, oh, once you learn how to trade, it's just what's going to happen. And that's another thing smart money does to people, is they feel like they have to know what's going to happen, or they get so hell bent on what they are sure is going to happen, and then they just completely commit financial suicide along the way to that happening, which sometimes it doesn't happen. So I won't take any more trades today, but I did want to start off by reviewing that and just go over it, because it happens. There's days where there's a reason I have a 2 loss a day limit. If I take 2 losses, it doesn't matter if I've taken 2 wins. If I take 2 losses and I'm still up for the day, I'm done. It's just something that's helped me over time, build consistency, not at the end of the day or the week, but at the end of the month. And another thing too, with funded accounts or challenges, you shouldn't, strategies that have a lot of losses don't really work that well to actually pass the accounts and make money. They might work better on a personal account, like a smaller account, but the only fix to those strategies is risking super small amounts. But then, it's okay, if you take a 10R trade with, a quarter or a third or whatever of the normal risk you would take with a 3R trade, it just doesn't make sense. It's just makes more sense to go with a trade that it's not as hard to, execute or be right on, because I think everybody knows it's a little easier to get 3R than 10R and risk more. So that two loss a day rule has helped me out a lot. I want to go over, look at crypto. I have ETH in this POI right here. Nothing yet. And again, I'm not gonna trade even if I get it, but I did want to just share this with you guys because some alerts went off. So ETH came back up into this zone. I think it could go higher just because we could look at this as liquidity, but there was a pretty strong displacement. If we get onto a 1 hour, we're in this order block right here. This is a classic ICT order block, just massive body candle, and then a sell-off engulfing it. We also are trading in this fair value gap. So with that being said, one could watch whatever time frame that they would execute within a 4 or a 1 hour. You could use a 5 minute if you want to be aggressive, but in my opinion, I would probably go with a 15 minute, because this would be more of a short-term swing trade. And also be mindful that it's Thursday, so going into the weekend, a lot of times crypto is pretty dead. So sometimes it's not. Sometimes it goes crazy, but just keep that in mind. Also, sorry, excuse me, a potential power of 3 here. We had that little consolidation from Wednesday till yesterday morning, or I'm sorry, not yesterday, to this morning, and then push up into a POI. So and I put that tweet out yesterday because I get so many people like power of 3 gets so overcomplicated, because if you go watch the accumulation, manipulation, distribution free video that ICT has, it's just it's a good explanation of it, because I mean, obviously he's the one who came up with that that term and that ideology, but it overcomplicates the fuck out of it. It's just literally a range and then a push out of that range into a point of interest. That's literally it, and then a reversal. So it's just a confluence and a narrative tool that can be good to train your eye for to recognize that pattern. Joe Money asks, what was my biggest obstacle when getting funded? I mean, I think I had traded for a long time, and I had been profitable on a personal account for a long time, and I really didn't give a fuck if I lost. So I think that those were what helped me from avoiding a lot of the biggest obstacles. In phase 2, I definitely had, like, you know, once you get to phase 2, there's more pressure on you. But I think it really comes down to, like, a lot of people are going after these funded accounts because they're not where they want to be financially, and then it creates an existential stress on them, and they sit and are very hell-bent, like, I gotta get this account, this is my meal ticket, and that will force you to lose a lot of the time, because being afraid of losing usually will equate to losing. But I think that's a main obstacle, and really with funded trading, it just comes down to, like, have you been profitable on a personal account for months? And if not, you know, I don't know what makes you think you would be profitable on a funded account. And if you have been, then the only thing that stands in your way of getting funded is psychology. So if you've been profitable on your own, and if you can't be profitable on a funded account or a challenge, it's psychology. It's just, you know, it's going to be FOMO. It's going to be cutting your trades too early because you just see that blue number and want to take it. It's going to be fear of losing the account and fear of, like, failure, because I think a lot of us, if you're like me, you know, it's easy to forget like I try to be perfectionist sometimes, and it's easy to kind of value your performance in trading based off of a short period of trading. Like, for instance, you can go through a slump, and if you're a perfectionist, you might be like, wow, I'm fucking up, like, I suck, I forgot how to trade. You might start thinking those thoughts, but you have to be logical and remember, like, hey, I know how to trade. This is just part of the game, and you can't value your performance off that. Can I explain the Judas swing for my power of 3 tweet? Yeah, sure. Here, I'll go to that chart there, right here. So Judas swing's super simple. It's just a rate on liquidity, but it's during going into the London session. So for instance, if you're a trader in this range and you are looking to trade the breakout of this accumulation range, you're going to try to short right here, right? So you're looking at this as a breakout, and once price kind of comes up and taps that, you're going to say that's a break and retest. So the idea is to trick traders into going short here. So whoever, you know, banks, whatever you're going to call the composite man, whatever the name for it, the larger investor that is manipulating the market, that is where they're going to buy up all those retail traders selling to them. And it's not even just retail traders. There's, you know, that term is, like, thrown around. It's just a selling point. Just traders that are not informed, or traders that don't trade on the basis of liquidity, they're going to short right there, and larger forces are going to buy it up from them, and then you'll see that subsequent expansion into the true move of the day. So understanding draw and liquidity is really important too, because yesterday I took a trade off this. Like, I was trading during London, and I traded this. That's why I wanted to make an infographic of it, because I was like, that was super good example of power of 3. Now, where I messed up was not extending my profit to the draw and liquidity. Yeah, I made 5R, which is a great trade. I just targeted the Asia highs, but I could have made a lot more if I would have targeted the previous daily high. And I don't want to inspire that, like, oh, could have made more mentality, but it is important, if you once you have a strategy, to refine it and understand, you know, like, hey, okay, maybe you're taking profit. If you see your trade always, like, you know, 80% of the time it's going way farther than your take profit, you could probably go in and rehash and redesign something to get some of those profits. Because the thing with trading is, it's really important. If you know, I've traded low risk to reward strategies with a high win rate. I've traded high risk to reward strategies with a low win rate. And either of those work, but there has to be that relationship where one outweighs the other. So, if you're taking high risk reward trades, you got to let them be high risk reward. A lot of people will take like a 10R trade and they'll trim it 6 times before they get to 10R, and it's not a 10R trade. It'll end up being a 3 or 4R trade. So
even less than that by that time.
yeah, a lot of people do that too. Like I see it on Twitter. Like I saw this one. I wasn't even like in the mood to like talk shit, which is rare. I'm just kidding. But I was it was like this dude. It was like a 30R trade, and it was like 8 TPs. I was like, fam, you could have taken that at like 4R, like, and then just called it a day.
That's all around 2R.
Like, bro,
Taking 75% at TP1. Yeah, nah.
Yeah, no, it's just like, a lot of times, like I think like for intraday traders, like you could definitely hit 10R trades sometimes, but I feel like the sweet spot's like 5R. Like that's what a lot of trades will. And as far as in that day, you might, swing trades can go much longer, but
I've noticed it's been around like at least for my intraday trades, they've been near average. I would say 5R to 15.
Yeah, so it's like, and if you're on like, if you got it funded, bro, and you're hitting 5R in a day, like that's incredible. Like that's not something to just be like, oh, okay, like that's like thank you God type shit for a lot of people. You know what I'm saying? Like I mean,
yeah,
bro, like
300K count, dude, 5%.
Yeah, and I only risk 0.5%. I've been testing different strategies, and I know I keep saying I'll make a video on Forex replay. I've just been so slammed this week, but I want to make a video on this software because it's so good for back testing, because I want to get a strategy that I can risk 1 full percent on all the time. And the only reason I don't right now is just because I know my psychology I start to get a little anxious when I'm in a trade. If I'm like, if I'm up a bunch, whatever, but it's just like, I know myself, but I know that data helps me a lot too. So like if I have, me holding a 1% risk for like 5-6R, like, bro, there's some big ass numbers. You're gonna be like, oh yeah, let 15K go to break even. Like that's a great way to just have a bad day. Somebody asked, can I check oil? Hopefully that explained power or the Judas swing. It's just basically a manipulation out of the Asian range, and then you'll see that be the low of the day. A lot of times you can use standard deviations of either the central bank dealing range or the Asian range as a kind of like a target for where the low of the day will be. I think that central bank dealing range would have probably been the one here, but I went with the Asian range, yeah, because it went, let's see, high between that. I mean, it was closer to this. So you can like target, but if you see the 4th deviation was also very close to the daily high. So the standard deviations from the central bank dealing range and the Asian range can be very valuable to intraday price targets, because if everything is running on an algo, it's going to be running on math. It's not always running on, even like for instance, if it generates a high, and if it generates the previous daily high, it's already kind of set where the Asian range for the next night's they're gonna put that. So that's gonna be only so much. There's gonna be so much meat on the bone, so to speak, because major. They don't want too major of a move. You know what I mean? Because that causes other things to profit and loss. I mean, we are talking about foreign currency. Can I check oil? Sure. Take a look. Well, okay, so it looks like it swept liquidity down to this POI we were talking about. So we pushed into it once, and now we've got a sweep. So now you're at that point where you can, consider something if we get structure agreeing with that. On the daily chart, we're down in this order block. I've been seeing a lot of oil news in the Discord. I know we have a bot that like alerts. Saw something, I can't remember. It was like US something about like House Democrats were trying to tax oil harder, but also expected them to up production, something along those lines. I don't want to say it wrong, but there was some kind of oil news, so that would probably cause a flush. And that's probably why we flushed out here. So we took out the lows here. Looks like on the 1 minute, we've got this nice displacement out. I would say at minimum, you know, you're probably going to get a premium, move into a premium. You've got this order block right at a premium and a fair value gap. So, you know, kind of low hanging fruit. I would say this fair value gap looks pretty appealing. As far as trying to long out of this zone, I think you've got some ways. Like, I think you need to get over this high with some displacement if you want to start to see that bullish narrative. And that's really even being early, in my opinion, because the 4 hour is still kind of just grabbing liquidity. It's not where I would want it to be to like swing anything. Okay, indices. I mean, they've already came into a premium, got a full fill of this fair value gap. And there is this buy to sell range right here, this order block. We're also trading within breaker block. We haven't broken the high of it. So this is one of those where it's questionable for me. If I was trading still, I wouldn't even trading this because I could see both ways. I see the displacement up and this buy to sell range, but we are in a premium and have tapped into the breaker block. So I would probably lean towards at some point more downside overall. Got an alert on the Dow. Yeah, the Dow already tapped into this buy to sell range. That's where the Dow is just on its own shit lately, bro. Can't tell the Dow's shit.
Any SMT divergence?
I don't think so because they've all made new highs. Yeah, no, they've all made new highs.
Glacier just said he was looking for a short.
Yeah,
Or he was
I would
stepping
lean
in.
more towards that for sure.
I'm already
For
in
what?
shorts.
NASDAQ?
Yeah, I took Nas sells at
I kind of want to add some more.
11,634, and I added onto my QQQ puts.
Fancy's gonna fucking deploy the grandma's pension into fucking NASDAQ sales soon. He's adding more yesterday.
About to, bro. I thought 11,500 was a good spot, and you know they were up pretty nice around Asia session. I'm like, okay, you know, like
The
I'll just
fucking
chill.
news drop is gonna blow your account, and then
Right.
go in your direction.
At
I
least do
know.
that. What do you ask?
They're like, oh, Fancy's in with full margin. Yeah,
He
and
bought or
pump it.
he sold. Pump it. So
Like I'd rather just stay small risk here, low key, bro.
yeah,
I added
always,
yesterday.
bro. Always, especially since you're unfunded, bro. Like, you know, just don't let the demons get to you.
Because my original entry's up pretty nice, but fucking my other entry I had yesterday was up good, and then now I'm just a little bit of DD, but just trying to
I had to
chill.
close my original entry the past phase one.
Sorry, I didn't mean to interrupt your stream.
No, you're good.
Casper, go
I
ahead.
interrupted you. I had like asked you a question, and I'm like, oh, anyways, ADHD. I got a fucking ad here. I want to show you guys this. I got an ad on Instagram. It was hilarious. I got an
Damn, are we
ad for
finally
like
reversing?
ADD. Yeah, it looks like I think that 1 hour breaker looks pretty nice on ES, or was it NQ? Was that just on? Or was it a 4 hour? I swear I was just on something that had a breaker block, wasn't I? Or am I like crazy? Oh no, it was
You
a 4
were.
hour. It was a 4 hour on
Yeah.
on ES. That's what I was like, bro. What the?
30 got smoked.
We went external sell side to external buy side on Nas. That's why I was saying we might reverse here.
Goal was too slow, so I had to play 30.
Oh, gold. No, I'm
Oh,
just
we
Hey,
kidding.
just-
she hit my zone though. You see that zone?
Yeah,
That
no,
little-
that's where I
little-
should have watched that 1 hour. That was where I fucked up because I've been using the 4 hour a little bit more on Forex than I usually, because I don't use the 4 hour as much. I mean, I look at it, but as much on indices. But I fucked up. That was like a classic rookie mistake. If I would have went on the 1 hour one time, I would have just not even. There wouldn't even have been a single trade. But that's, you know, just a reminder. It's the market always has a nice way of just like, hey, motherfucker, like. No,
Follow
you
your
know
rules.
you should have done. You know you should have done this. Like fuck you.
Follow your rules.
Give me that
boy.
1.5 R. Yeah. That doesn't look bad at all up here. like as bad to short for clarity. We asked, would I recommend trying a funded account straight from being profitable on demo, or go from demo to personal funded? You know, I think that's a per person thing, and it matters on like, are you like when you say profitable on a demo, do you mean like you've traded for 2 months and you're up, or like you've really like, and you're the only one who knows this, like you've really like collected data, you have a, you know, you can write down exactly what it takes for you to get into a trade, and that exact strategy is why you're profitable. If you've done the right thing and like really put in the work that most people don't, then I would say, yeah, sure, go for a funded. But that, I think really what it comes down to with a funded account too, and a lot of people don't ever talk about this, is it really is very reliant on what kind of person you are and like how dialed in you are in life in general, because it's like a big psychological hurdle. You're like, oh, hey, you know, here's a way to change your life. Don't stress out though. You know what I mean? Like, so it's like, I think it inspires a lot of like rash decision making and a lot of emotions, rightfully so, and it makes sense. It's not like, don't like, if that speaks to you, don't like damn, like that's me, fuck, you know, that's not how you should feel about it. It's reasonable to like be stressed about it, but a lot of it just comes in to play like, where are you at in life, how much work have you done, like, and you know, like, you know, a lot of times you know how dialed you've been with your practice and your trading. A lot of people just get a demo, they're just gonna over risk and overdo this and do shit they wouldn't really do if it was live, and then like they're up like 40K, 50K, and then they go to a thing, and it's just harder to maintain the same composure. But I I guess I would say like it's better if you've traded on personal accounts for sure, but I won't like rule out, like, I'm sure there's a lot of people who really never traded much money in a personal account and still got funded. I'm sure there's a ton of people on that.
I agree.
Yeah.
I think personal is the end goal. I think it should be the end goal for everybody.
Well,
personally.
a large personal, yeah, for sure.
Yeah, and funded is the allocation to get that capital.
Yeah, I've been lacking.
Yes,
Like
that's
I've
the point
been,
I'm going with.
Yes,
I've been,
sir.
ever since, so like, I used to have like, like if I wasn't funded now, I wouldn't be comfortable having what I like. I used to be like on some degen shit on Binance, like real deal degen shit.
Oh
Like
yeah,
2021.
Shit, we all was, man.
Yeah,
We all
like,
were.
you know what I'm saying? Like, but you know, so at at this point, like as far as personal trading with like anything, I would be only on MetaTrader accounts, but I still haven't even like taken any of my funded profit and put it into a personal account. I honestly just have been, it's been nice. Like it's so nice to not have your own bread in anything.
No, I agree 100%.
But it
It's
is
risk.
better to have it in like I agree. You should have it in, you know, something. It's just passive income at that point. I think
Dude,
that's
I
how Power
feel
of
like it's
3,
a better like moral decision
right?
because I'm not taking money from like fucking people losing trades. I'm taking money from people blowing.
Oh
funded
yeah, no, I
accounts.
didn't get you. Yeah, that makes sense. So this actually is a pretty clean looking Power of 3. Good eye, Ryan Martin.
I feel like a better person trading a funded.
Yeah, this actually is a pretty good. I like that. Yeah, on the or I was on the Dow. So yes, you asked about yes, yeah. I could see it on ES. I like it better on the Dow, but I definitely see it on ES because it's. I mean, it's really the same thing. You just got more of a premium on Dow. On ES,
Yeah,
it's
just
still
like
in the
a down on the
breaker.
monthly.
On the monthly.
Dude, we mitigated the COVID block.
Oh
or the
yeah, yeah.
weekly.
From like whenever
The
we
COVID block.
COVID block.
That's what. No, I'm saying that's what I've been having drawn on Nasdaq and SPX for like since last year.
Yeah, but I
Or,
feel like
like-
it'll tap. I feel like that's like. So like
No, but
everything
what I'm
else,
saying
like,
is we haven't tapped it on NQ or ES yet. We haven't hit the COVID block.
COVID block.
And Dow is doing exactly what I want NQ to do, where it sweeps the August highs and then continues bearish.
Yeah.
So you guys might like. You guys may have just caught like a really fat top on Dow. Because this is exactly what I'm expecting NQ to do on the weekly. To
The
come
fuck,
sweep the
Jalen?
August
Longs,
highs.
dog. I'm in longs.
You're in longs. I thought you were in 4-hour shorts.
Did you see last night though?
Yeah, you're just playing the in between move. Like if I look at my 4-hour chart on Nas, dude, I have like 3 or 4, like 3 15-minute shorts in between.
I was playing the up to down, but no, I was trying to short it last night, right? On the 4-hour fair value gap, you can see it clean right there on ES and NOS too. But I was trying to short that shit, and then H1 broke up, so I just took the long. And that shit brought me fucking 7.8 R.
Does this mean Dow is like the first is like the non-lagging
Well, I mean, it's a
indicator?
recession, so like historically, industry is going to be the leading indicator because that's kind of like the roots of the economy. So like tech is going to be the first thing to go. You know, like in a recession, like tech is like less people are buying computers and less. I mean, it's way deeper than computers as far as like chip companies. I understand that, but like there's a lot less money that is to be generated in those those sectors than there is industry, or as far as what's gonna be the leading most wild markets is. That's why the Dow Jones is the Dow Jones Industrial Average. It's companies like Boeing and there's far less companies than Dow too, and larger companies. But somebody asked, how do I use weekly bias, or do I use weekly bias, or weekly open to set my bias? So I don't really use it. You use it kind of like in hand with your bias, like other things. Like for instance, if on Euro, like if we have a weekly open right here, and then on Monday and Tuesday and Wednesday we're dipping under that weekly open, if we're moving into areas of liquidity, or we have a clear draw on liquidity above, then a lot of times you can use like, okay, well, we're dipping under the weekly open. We have tapped into our higher time frame point of interest. We have structure agreeing with our narrative that this is going to be the low of the week. You can use it like that. It's just one tool. So, and same thing with power of 3 on the daily candle. You can do power of 3 on the weekly candle as well. We actually had that whole class and play bit on that, but it's just another tool kind of to that. So I wouldn't say I use just it to set my bias. Joe asks thoughts on BTC. I think I mean, 16, what is it, 16 like 7? 16.5 is what I'd say. But the thing is too, I feel like fucking everybody I've seen on Twitter is longing at 16.5. I swear to God, like literally. But I still like the zone. I mean, it's this nice order block that took structure and pushed us really back up above. But I'm not gonna say I think for sure we're gonna rebound from just that zone. I would want to see a structural confirmation of that. So, and the thing is with the stock market, looking how it looks, I think there's a good chance we might dump down into the 14th whenever the interest rate decision comes. I think that's, if we were to get an announcement that the Fed is slowing down on interest rate hikes, we're probably going to dump into that. I mean, it just makes sense, like, okay, well, if it's going to fly, we want to, incite a bearish narrative first. And I'm not going to trade on that. I'm not encouraging trying to like foresee the future with news. I think that's super bad, but it's equal lows too. They get clocked probably. Look at a couple other pairs. Let me see if I got what other alerts I got hit with. Oh, that zone didn't mean it. Dollar Swissy taking it. Now Dollar Swissy's in an area where I like it more, honest. This refined zone, because there's a 1 hour order block down here. Let's see. At this point, I would want to see the 15. Oh, it already is kind of going. I like this fair value gap right. An alert and just watch it just give the perfect trade. I don't take. That's the one thing that's funny about like whenever I first made a rule to like have like you take 2 L's, done trading. it's funny because then it's like, then your brain will start seeing more trades. You're like that meme of that guy looking at glass, but you gotta stay disciplined. And little things like that, like one thing that I do this with, like for instance, when I wake up, I don't look at my phone until I make the bed, read, have my coffee. Like just little things like where you have routines and you build routines that your brain goes against and your brain doesn't want to do. Doing that and building, you know, your brain will get used to being disciplined by doing little things like that. There's a reason the military makes people do, they make them fold their clothes to, the last fucking inch. And all sorts of different things. It's just to build a mental fortitude that most people don't have. And it's the stupidest little things you can do to do it. But I think that like creating rules, and Mark Douglas talks about this, creating rules in your trading, no matter what they are, as long as they make sense, they're good when you have to follow them. Like it's a good exercise to come to that point where you're like, fuck, I don't want to do this, but then make yourself do it, because that's going to translate into your ability to do that, and follow your trading plan. I swore. Oh no. Oh yeah, I'll talk about some Matic TA I did last night and XRP. So Matic on the daily chart, this to me looks like no question this low is going to eventually get targeted. So that's a major drop. So when I look of, where would we rebound, we have an imbalance right here, and we also have this 4 down candles. I haven't looked in the week, probably a weekly order block, maybe not. Yeah, it's very close to this weekly order block. So, we have all these levels right here under this range. I could see this as a massive power of 3, and you could see how a ton of shit can be a power of 3. Power of 3 this, power of 3 that. I get it can get, all over the place. That's why I put that tweet up, because I see so many people it's like people try to like over complicate it to sound smart. There's so many Twitter people that do that. They're like, oh, people don't even know. Like some shit, it's not that hard to teach people, bro. You just show people what it means. It's not that fucking hard. So like you could see something like this right here. So daily chart, if I build a narrative from the daily chart like that, where I say, okay, in order to continue following bullish order flow, this would need to happen. Because if you look after the major dump, Matic has been one of the strongest coins coming out of, this earlier this year, like the major crypto crash. So we came down into this weekly order block. And then once we came into that weekly order block, the daily shifted structure. Got a nice, really big push. And if I look, what caused that shift of structure, this order block is where smart money was selling on the move down, then push price up. So that's what gave us like our major chains of structure right there, taking out that strong high. So if we're looking at this as a range that's accumulating above so area of interest, we look for price to then push into higher time frame POIs before we come down. It's classic ICT. You take the buy side into a POI, and then you're going to take the sell side. So if you look at that weekly imbalance, price pushed up into it right during the FTX crisis, classic to happen with news. Then price starts to fall back down to this range. So now if we want to look to get short, we can do so from this range. But, I'm looking for more crypto trades recently, trying to just find some more action in that sector. And I've been studying some coins. I like the way Matic moves. So when I go and say, okay, well, if my narrative is that we're going to push down into that daily order block and push down to this range, what's going to happen in order for that to occur? Well, if we're looking for price to come back up into this order block, we're looking for bullish price action up until then. So I say, okay, if we get a push down into the last area that I can identify where institutions were pushing price up, which is right here, because if we look, we came in this order block, massive push up, taking out this structure. Same thing with the Bitcoin area. I'm actually going to move it. That was where I had it. So we have this little sell to buy range where smart money is going to create that false narrative. We all know smart money buys on the down move. So then we push up and we take out the structure. We're kind of consolidating here. And now price is given some displacement down. We're inside this order block up here. So probably we'll see a push down into this zone. Now, if I was just trading Matic, you know, this is how you build those narratives to where you can kind of say, okay, I think we're doing this because of this, and this is how I'm gonna execute based off that. And it all kind of comes together. You don't want to just say 4-hour order block, I long. You know what I mean? You need to understand and develop a story of what's going on so you have confidence to execute and maintain your plan. So here, if we get a push down into this area, and if I get a lower time frames agreeing, I will long up to this high. I'm not going to long to the order block. I'm just going to long to the nearest liquidity to it, because you never know. Price does weird things sometimes. So that's kind of the plan with Matic. Now, if it comes up without me, then I will look for shorts up in this zone. So that's that. You see how it's like an if-then. If price does this, then I'll do this. If price does this, then I'll do that. You know what I mean? So it's really important to do that, and then just set your alerts, your swing trading, and just kind of sit back. Baxter asked, said, thanks for answering. Yeah, no problem. Can I check pound Aussie? Yeah, sure. I haven't looked at that pair in like, wow. I think I've ever actually like traded this pair. So you said, we've swept daily buy-side liquidity price. You're hoping that since we've swept buy-side liquidity, price will retrace to a 1.7 daily fair value gap at the equilibrium. So I like it, honestly. I like that. I mean, look, we took out this right here. Nice, pretty clear raid into a fair value gap that wasn't fully mitigated. Or actually, I don't think it was tapped into at all. Let's see. Yeah, no, that's actually super clean. Good eye. I like this. So, see, we pushed right into that. So now that we've this kind of goes in hand with the structure video I released earlier. So I'm glad that you're drawing it correctly. So a lot of people will draw this, and then once price comes up and does that, they're gonna say, okay, well, we've got a new range, we're still bullish, and I'm gonna long from right here. And this is a super common mistake I see people make, because like, look at that. I mean, it's like, oh, okay, well, I've got a sweep right here after this liquidity daily order block. I'm gonna long from there. But what people fail to realize is that's not the external structure. You have to move kind of relevant with what's been going on. If you have this massive move, we know there's a lot of institutional involvement. So you can't consider this little baby move with no displacement another set of structure, a new dealing range that banks are operating within. You have to look at it like, okay, well, this is probably just taking out the liquidity. Because remember, again, price goes from internal to external liquidity back to fair value. So we've already went from internal liquidity to external liquidity, taking the buy side, and not only that, into a fair value gap. Right? So if we look at the weekly, even clearer, because if we look at the weekly structure is bearish, and this is the first real POI in a premium. And we rated these highs, equal highs, to a gap. So I really like this. So what I would do now, go on a 4-hour, you started to get this displacement down here. So I would kind of layer it and just start getting confirmation across different time frames. Yeah, this is where I would look, this little buy to sell range. I wouldn't consider all this right here. But this is really where we kind of pushed away from. Got that break of structure right there. So this is the part where I would just say, okay, I'm going to wait for price to go back up in here. I'll send an alert and watch for it. I don't really trade this pair, so I don't know if I will, but so I would watch like 15-minute and then I would just wait for it push in the zone, sweep of liquidity, and then displace and break a structure to confirm smart money is selling. And then you can layer it as many times you'd like. Maybe the 15 minutes enough. Maybe the 4 hours enough for you. Maybe you just want to shorter from there. That's all up to your strategy. Mohammed asks, sir, when we get 15 minutes swept on gold, first trade, do we need to go lower time frame and look for the displacement, or are we just saying the 15-minute? So for me on the first trade on gold, I was just using the 15-minute. I wasn't even trading the lower time frames. And then this morning, and the reason for that was I was using the 4-hour zone. So I was just using a 15-minute confirmation. I don't always go in on a 1 minute if I'm using that, because I'm more of like that's going to be a short term to a swing trade. But this morning, the reason that I used the lower time frames is because we took 15-minute liquidity. So I wanted to take that trade based off that. But again, this is why I always stress context to you guys. And I made the mistake of not being in the proper context, which happens. But yeah. Either you just move from Australia to the United Kingdom. So looking for gig along at 1.7. Yeah, I mean, even with the here, I'll actually have it. Even with you know, the fair value gap down there, you know, you could possibly get longs up there for sure, because we took a lot of monthly liquidity, I'm guessing. Still have some relatively lows. You know, to be quite honest, I would almost look downside. I don't want to shake your bias, but if I look at the weekly, you know, the weekly external structure is this. Now we're in a premium of the weekly. We're in a premium of the daily. Moved into this area right here. Now we definitely could move up higher. There's a weekly order block. There's an imbalance. So, you know, watch for the longs down there, but be mindful that we are in a weekly bearish external range. And if price moves down with enough force into those zones, you know, be a little cautious, just because we do have those lows down here. It could be a target. So just be mindful of everything. Anybody get some crypto? I want to look at link. All this highs and lows. Oh yeah, I was looking at this. You know, on the daily, it doesn't in the spot. Because we've got so much liquidity here in this range. I mean, it's just literally sideways price action for 6 months, literally 6 months to the. So it's like, oh, kind of just range bound. I look at the daily. Straight into. I like this POI better. Down here. I'm actually gonna set an alert for this last candle of it. That would also go along a Bitcoin. The only thing that goes against everything right now is so much equal load ominous. But at the same time, you can look at that as SMT. Make a lower Ethereum we did on Bitcoin. Oh, yeah, you could look at it. It has to check waves. Yeah, I saw as well. But yeah, somebody said, or not somebody, I saw on Twitter that Waves is going through like some holy shit. Waves to 0. I mean, I'm not one to really play these, you know, like whenever they're a longer chart. I'm never one to really play like the depegging and collapse, all that stuff. It can be very profitable if you're on the right side of it, but my rules are to not trade hype. And if you are, I mean, the charts at these points, I mean, if I'm just looking at a chart, I would say it wants to take these lows and potentially go back up in the gap. But, you know, if it depegs and all these places start delisting it, then that's probably not going to happen. Who did I get funded through? My Forex funds. FTMO and TIA. TFF, I've heard the only problems I've heard about TFF are the spreads, like or slippage is really bad. Not the spreads, the slippage is really bad on Forex pairs. Like I've had a friend that got stopped and it was supposed to be for like 1,500 and they got stopped for like 4,000 and basically TFF told them to go fish. That's the only thing I have heard bad about them. Other than that, I know people that have gotten payouts from TFF. I know their crypto spreads are super low. There is some benefits there. FTMO is probably going to be your best bet with like customer service, and you're gonna feel the most safe with them because I think they're the most like blue chip. My Forex funds is good. I haven't had really too many problems with them. I've had the spreads widened on me really bad once, but that's gonna happen everywhere. Their customer service isn't the greatest from what I've heard. I haven't dealt with any problems, but that's a little bit of a crash course. I think any of those three are better than most other choices because I see like the most random funding firms and people trying to use those crazy funding firms. I'm like, why are you doing that? Just because it's like, you're trusting these people with your money, you're trusting them with your time. Like I couldn't imagine what it would be like to go getting funded and then get fucked over. Oh my god, I'd be absolutely.
Yeah, and it's usually only because those funding firms are like $20 cheaper than FTMOs, so people are just like broke as hell and just wanting to save 20, $30. Like, why would you not go with the most reputable prop firm and save yourself $500 on a funded rather than fucking saving yourself $20 to get licked? Like,
Yeah, exactly. I don't
it's
get it.
ridiculous.
Yeah, waves would definitely be a lotto short, sure, if you're gonna do that. But I would be careful. But on that note, guys, I'm gonna hop off here. As always, I appreciate you all coming through. If you have any questions, don't hesitate to get at me. You can do Twitter, Discord. You guys know if you're in the Discord, super easy to get at in the chats. If you want to start a free trial to the Discord, the link is in the bio. You can just use code CASPER, all caps. It'll get you a 5-day free trial and a discount on your first month if you decide to stay. So on that note, I will see you guys tomorrow.